So the question we want to ask ourselves is, where is the weight of evidence? Is the weight of evidence that the market is wanting to and going higher, or is the weight of evidence that the market is going lower and wants to go lower? Hey guys, this is RC Peck with my weekly update, and some interesting things are happening in the market. We have a lingerie company and crude oil absolutely killing it this year. They make odd bedfellows, pun intended, but there's a bigger story behind why Victoria's Secret is moving higher and energy or crude oil is moving higher. And it's a lot to do with what the market is doing and what the outlook for inflation is and your bonds and equities and the market. And we're going to dig into all of that right now. And if you stay to the end, I have two individual companies. About 10 years ago, someone asked me if I could they said, look, if I just wanted to buy one precious metal mining symbol, what would it be? And I gave him that symbol. And over the last decade, it has absolutely outperformed almost every other symbol. What I want to do today is give two symbols. One is about maybe 10 or 15 days ago, someone said, look, I have 10 or 20K. I want to put it in a symbol. They didn't say that. They wanted to put it in a stock. And I don't want to have to look at it, but I want to be able to maybe look at it in 5 or 10 years. And what's something that could do 10 or 20 or 40 or 50 times without me looking? And I am going to give you that symbol at the end of the video. It's literally a buy and forget symbol that could absolutely go up 10 or 20x over the next 10 years. You don't have to babysit it. You don't have to look at it. You don't have to do anything. Okay, so you get that at the end. Let me do this. Let me jump over to the price charts. So look, let's just start with, let me get as much real estate on the screen here. Let's just start with the all world index here, VT. It is priced in US dollars, but you can see it's at new lifetime highs. New lifetime highs is a sign of strength, not a sign of weakness. Now you might go RC, VT, all world, that's like 60% the US. It's like, yeah, fair enough, guys. Here's all world X US, and that is at new lifetime highs and looking to move higher. Now, to me, the big story is really energy. So here's an energy ETF, XLE, and it has done really well. Let's say right about here. Year to date, it's up about 32%, which is pretty good for one of the main sectors and slices of the market. And as your brain can see, it's clearly coiling. It's looking now, it is starting to do its next move higher. Now, this is on the back of, wait for it. I gotta get the symbol in here. Crude oil. It is also coiling, as you can see there. It's in a coil. And if you gaze to the left of the chart, you can see there's a lot of information over to the left that it's moving through. But it's moving through it, right? And it's in the top half of that noisy section. So it's moving up through it. And that is absolutely helping energy. So we need to think about the type of environment where energy is moving higher and Victoria's Secret is moving higher. So on the one end, we have something that no one really needs is lingerie or whatever else L brand sells, right? But it is discretionary. And here is that price chart here. It's about 500 or 600%. Now look, this looked like it was going out of business or close to it. I mean, anything that this is a true bottom, and it was bottoming much longer than anything else. But from that COVID bottom to where it is now, it's up about 6x. That's a pretty big deal, 600%. Okay, and it's one of the four top performing stocks in the S&P 500. It's one of the top four. Two were discretionary, consumer discretionary. Think about the environment where consumer discretionary is moving higher. The other one, if you're wanting to know, what was the other consumer discretionary stock? It was Gap. So again, think about the environment where clothing companies are moving higher and absolutely crushing almost everything. Now, the other of the top four symbols in the S&P 500 this year, two were consumer discretionary and two were energy. The energy was Marathon. So here's Marathon right here. Same coil here. Its move, when it finally started moving, went up 2.4x or 240% in a very short period of time, 4 months. I think when it breaks, it wants to get up to here. So we're looking at 100% gain. And these are the type of trades you want. Now, there's going to be a lot of noise in here, guys. Okay, but it wants to get back to this number here. So in many ways, the downside of this is 15%, and the upside is 100%. That's a 1-to-6 ratio. That's a good ratio. The other energy stock was not the tech company's FANG, but the energy company Diamondback Energy. And that is looking even stronger than Marathon Oil right now. It really looks like it wants to break higher. The upside for this one to get back to its highs in 2018 is about a 60% upside. If it closed below there, you're risking about 16%. So the ratio is not as good, but the upside potential up here is so much stronger. You can see if you look over to the left of the price chart, it just could not break above 130. And man, if oil keeps going, I think it's going to. Now here's what's interesting. Energy going higher is inflationary. DBC is basically the S&P 500 of commodities. And you can see here, it is just about to break out to new 3.5-year highs. And I've talked about commodities before. This is real inflation, not interest rate inflation or printing money inflation, because that actually never showed up. But this is commodities moving higher on the price chart here, which means true inflation. And then to double check if inflation's happening, first we looked at energy stocks, they're going up. We looked at oil, that's going up. The whole commodity complex is going up. Then we can look at inflation protected securities, and they're the best type of bond out there. So people often ask me, if I have to be in bonds, where should I be? And I say, be in TIPS, because those are one of the 2 or 3 types of bonds that are going higher. So lots of stuff going on. The weight of evidence is that inflation is coming. It's here. Looking at commodities, looking at inflation-protected securities, it's happening. And also, too, the world is opening up. People are buying lingerie. They're buying stuff at Gap, whatever Gap sells. But that's the market we're in right now. Not the market you want or not the market you hope. And people are just getting so angry that it's going up. And I believe it's because they're watching the wrong channels. They're watching the wrong information that's actually getting them angry, especially if they're short or they're not in the market. So we have the top 4 stocks moving higher in the S&P 500. 2 are discretionary, 2 are energy. And that's telling us, I'm not going to call it inflation yet, because you've heard me talk before that. Let's see. For me to say that inflation is, we're having inflation, because I'm just going to call this reflation right now. The yield on the 10-year Treasury really has to break above 3% and stay above 3%. And that's right up here at the top of the chart. It can totally happen, but let me just zoom out here. It can totally happen, but there's a lot of stuff it has to move through in order to get to 3% and stay above 3%. You can see there's been some false breakouts, specifically here in 2018, where it attempted to break above 3%, but it didn't. So energy is moving higher, commodities are moving higher, lingerie is moving higher, crude oil is moving higher, Gap is moving higher. One other thing that I thought was also interesting that I want to show you before I get to the individual symbol, the kind of the buy and forget symbol, was frontier markets. Right, so these are kind of the small cap of geography, right? You have developed markets like the U.S. or Europe, that's developed. Then you have emerging markets, right? EEM would be a symbol that most people know for emerging markets. But then you even have below that countries like, I don't even know what's in it, Kuwait, Nigeria, countries that you probably might not want to travel to. But if you look at the price chart, you can see here, this is the iShares MSCI Frontier 100 ETF. So these are the smallest of countries around the globe. And you can see that it has broken above that very, very, very important kind of $29, $30 range and is making a run for its, if you guys have watched any of my videos long enough, you know that the beginning of 2018 was the trade war peak for many parts of the world. And Frontier, so like the dangerous, most riskiest part of the market from a geography point of view, they are cruising higher. They are doing well. And so set aside the noise machines and go, what type of market is happening where the frontier markets are pushing to new lifetime highs? Here's emerging markets here. They're already at new lifetime highs and they're digesting their big move. Then you have all world ex-US here. So this is international. They are at new lifetime highs. Then you have the US here. I'll do a symbol. Here you have the US. I'm using IVV. And so you have, from a geographical point of view, from the Earth point of view, the whole Earth is breaking up and out. Commodities are moving higher. And inflation is moving higher when you measure it by commodities. So that's what's going on. Here's the symbol. And sometimes people ask me the questions like, if I had to buy something and hold it or forget about it, what do you think it should be? 10 or 11 years ago, when someone asked me about precious metal mining, I said, if you wanted to buy a symbol for, by the way, this is not the symbol for today. I'm just telling you the one I gave last time. I said Franco-Nevada would be a symbol that you could buy and forget. And I don't remember, maybe someone who's been following me for years or decades could let me know. But I said, look, if you want to buy a precious metal symbol and forget about it, but just have a little toehold in precious metals, get FNV, and it will greatly outperform. And just for reference here, here's FNV and here's GDX. GDX is the precious metal mining ETF. You can just look at the difference between the two. Let's just see over that time period. Red is FNV, Franco-Nevada, up 900%, also known as 9X, 9 times your money. And GDX itself is up about 25% during that time period. Okay, so now the symbol. It was actually a friend of a friend that said, hey, I have 10 to 20 grand. I love when people are like, I got 10 to 20 grand that I want to just, do something with. Like, what do you think? And so I thought about it because I wanted her to have a symbol that had the highest probability of turning into something much bigger. And it's Shopify. Shopify is a $160 billion market cap company. It's basically been kind of going sideways for a while. But what I want to point out is a couple things from a more of a technical or trading. Notice that there's kind of this range here when it couldn't break above 1100, then it couldn't get below 1100, and now it's up a massive 10% today. So not just on a buy and forget for 5 or 10 or 15 years, but also even from a trading point of view, like you can have a symbol where you can both be like a investor, forget about it. And look, we have stocks, we have symbols in the market now that are $2.5 trillion. This is 150 billion. I'm not saying it's going to go to 1.5 trillion, but if anything were to scare Amazon, let me just bring up Amazon. If anything were to scare Amazon, which is a $1.75 trillion company, it would be Shopify. And if Amazon can become a 1.7 trillion, Shopify can be, and I'm not saying it has to happen in 10 years, but that would be the, hey, I want to get a symbol and forget about it, maybe buy it from my granddaughter or my daughter, or I like this idea of buying and forgetting a symbol and just letting the magic of the market do all the work for me, which is a big part of growing your portfolio and really getting clarity and control back over your money. So it's Shopify. I'll bring it back up here. And it literally could probably be a buy and forget. It hasn't been around as a publicly traded company that long, 2015. But as you can see, it IPO'd, and this is split adjusted, but since it's IPO'd to where it is now, it's up about 72 times. 72 times a dollar put into it. I know it's kind of dumb to do that, but $1 put into it back in 2015 is now worth $72. And you can see there's periods where it does consolidate. It does consolidate. And that's what I believe it is just now finishing, is its consolidation with that kind of $1,100 polarity. So There you go. Shopify is that symbol this week. Thanks, guys, for being in my world. If you like this video, you're absolutely going to love the Clarity and Control free course. Absolutely free. It's in the description. If you want more clarity, or you want just clarity over who to follow, what to understand, where to be, this absolutely free training video is going to show you how to really get that clarity back over your finances and your investing and your money and your trading. And the other thing is to get control back over this part of your life. Clarity and Control, check it out in the description. It will absolutely start the conversation of, okay, I can do so much better. There's so much my money can be doing for me than it's doing now. Thanks, guys. If you like this video, please hit the bell, subscribe, like. The YouTube universe loves that stuff. Thanks for being in my world, and I will see you on the next video. Okay, bye.